Yeah, boom. There we go. We are live, ladies and gentlemen. Okay, we figured it out. Thank you for joining us today. We just had Bitcoin on the daily, and that's what we're going to dive into. We screamed up to 25,000. Let me know in the chat that everything's going smoothly, or give us a thumbs up, one of those two things. Can never seem to be too consistent with figuring out how a live stream works, but just let me know. It'll be helpful. So what you should be able to do now is see Bitcoin on the daily. So this is the reaccumulation pattern that we've been following. Now, I feel pretty confident about this, and every step further, I've gotten more and more confident. Now, there are some good arguments in our private group around the potential for, let's say, a larger right. Let's first off take a look at how I've got it drawn up, and then let's make a counter argument for everyone there. So, primarily, this is what I was focused on. Here, the first primary support on the left-hand side of the screen was highlighted by this very significant area of supply that came into the market. Boom, there's primary support. And we fell down very quickly to a very hard selling climax. Boom, up here. So normally, primary support and selling climax are kind of bid out by these two large supplies. The next time we really see a strong indicator of supply is right here, where I believe the spring to be, right where my yellow or my red marker is. Now, CTO Larson shared a video, and one of some of our Bear members shared that video as well, and why I disagree with it. Now, he could be right and I could be wrong. I'm not entirely sure. I've been wrong before. It's not totally out of the ordinary, but this is where I think where he made a mistake. Now, primarily, he thinks that this was just a secondary test this spring, and the automatic rally went all the way up to here. I disagree with this. Selling climax happens right after the automatic rally, usually to here, but more likely here. And this is actually where the top of the range was put in. And as you can see, we stayed below the top of that range for most of this. The secondary test, what's important here as well, and where a lot of people fail to focus on, is this is not just about market structure. If it was just about market structure, it'd be way easier. You need to focus on the supply signatures, and that's something I didn't hear him mention at all. And here you have this increasing supply signature, boom, 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 of the sales volume as well, noted by dark blue, by the way. So changed all my colors. Dark blue is down, bright blue is up. I wanted something blue for fun. So this rising supply signature into the sell side, and the secondary test not being able to go lower than the primary selling climax. That was a huge indication that we were hitting secondary tests, the rising supply. Now, this fearful moment in the market, the spring here, was the day that FTX collapsed. And during this week, a long period, you heard everyone, oh, Bitcoin's dead for 5 years. No one's ever going to use DeFi. It's over for everybody in crypto. Pack your bags. Like, this thing is never coming back. This is exactly the type of thing and voice that you will hear during a spring. Massive amounts of fear, uncertainty, and doubt within the market, in a huge capitulation moment where we lost what was at least appeared to be one of the market leaders, or market leader frauds at that, what we came to learn. So this represents a spring to me. So many things about that say spring. Now, what was interesting here, this second moment, we had a test that tried to go lower than this line, and no matter how much supply they threw at it, so we'll zoom in and look at just the spring and the test here. Again, if you're focusing on market structure, you're going to make mistakes. And again, I make mistakes too. We're actually going to have a podcast with Todd Butterfield tonight of Wyckoff SMI Crypto. He actually owns the Wyckoff Institute, from what I understand. So he's been in the space for quite some time, in terms of like building Wyckoff mentality. But here, what I want to focus on is, again, the supply. Here we saw a secondary test with a big chunk of supply, hardly any movement within the market right here and here. This was important. This is what I think was the strong test, and you could highlight it with the supply signature down here. Boom, like this. So the next key thing that happened was this move into what appears to be the micro SOS. So right now, we went over this a week or two ago. I'd gone to Panama, so I took some time off. Wasn't able to look at charts. But here, supply line declining, continued to decline, and it continued to decline into the price structure going lower. That was actually a good sign. If for some reason we saw supply start to go up significantly on this downward trend line, this would have been this would have been screaming to get out. But there are a bunch of signals, especially as we start to look a little closer here, that was screaming bull. Now, primarily, we had a very large divergence here on the 4 hour. So you can see we made higher lows on the RSI while making a lower low on the price targets. That's how divergence is usually found. You can find this in a few different ways. Now, my argument here is against what they thought was going to happen, which is an automatic rally, and that this was a secondary test, and then this was the first area to make your STY. The reason why I'm arguing against this is because of these very definitive supply signatures that came in throughout the test, each of these. And that's what's more important than the structure. It's very easy to go, this is a right-hand shoulder, like a inverse head and shoulders, with your supply line actually being right here, and the very high likelihood that we're going to break to around 29,000. And I think that's probably what we're going to see in a very short order. Now, what's kind of fun here is we can keep going down in time frames. Now, first off, again, we are oversold on the 4 hour, but we had just reset. I think this is going to be a moment where we get oversold and we stay oversold for probably a while. So I think last time we were here, I said around 90 days, and that was around 15 to 25 days ago. So let's say another 60 to 70 days of kind of up and sideways. Now, I don't believe that this is the full bull market starting again. I think that would be kind of a silly choice. But what I do believe is going to happen is we're going to get something very important right now. And this is going to define what happens for the next 6 months afterwards, because we could go higher. Right now, I think we're going to get an SOS to around 28,000, and we're going to back test all the way back down, maybe even as low as 21,000 effectively. So it would look something like this. SOS up to here, and we'll get a final back up like this. Boom, boom, boom. It'll look like almost like a pretty classic bull flag. It'll just like that effectively. So this is the bullish case scenario, is that we turn around somewhere around 22, and then we go even higher. We could go as high as $45,000 to $55,000. It's not to say yet. But there are a lot of moments where, aside from the fact that we've got a very definitive primary selling climax, support and selling climax, spring and test, this could turn into an upthrust and distribution. So that's what we want to keep an eye on, because if for some reason we shoot up here, can't make it to 28 or 29 or 30, and then start to come back down, and we're back down here, this is not a great sign. This is likely that we would see a close, and then you could go a bunch lower technically. Now, the macro story is really bad. So first off, I wanted to note the idea that the macro story is horrible. Now, on the bright side, a lot of people haven't noticed how bad, or maybe that's not the bright side, probably not the way to look at it, Tio, but most people haven't recognized how bad the downside of what's going on is right now. Like, I'm really grateful to see people like John Campbell and Nassim Malhotra finally come around to some of this stuff, but I've been telling people for months now, the excess mortality rates are in a horrible place. Like, there's no good market indicators, but the market doesn't yet know what it's not aware of. The market continued to be positive in January and February of March, up until March 11th, the day that they declared a new pandemic, apparently. And that's when everything went finally bearish, was like 3 months after we knew the bad news. So markets are not leading indicators. If you look at the macro story, they're lagging behind, because most of Wall Street is not that well informed, apparently. And if they do get the early wind, that's a different story. So I suspect that what we're going to get here is a market cycle move up that goes up for quite some time. Now, again, we're in the very final crucial stages of that, because if for some reason we do not get this, and this SOS turns into an upthrust, and then afterwards a distribution, you can call a UTAD, so the Wyckofffians call it, and then you'd shoot up here, and then all of a sudden you'd start declining quite rapidly. You'd break below 21,000. Oh my God, we could come all the way down to $9,000 or something $1,000. It would be ridiculous. So that's the bearish scenario. I don't think that we come down lower to test 18,000. And again, a lot of people were thinking, hey, this is a inverse head and shoulders. And that was the main argument. I think we've already had the spring in the test, and we had a really long drawn out spring and test that had its own tiny accumulation range. And that's what's another really important highlight of why I think that that's an incorrect thesis. Not that it matters. Again, place your bets how you choose. Like I'm only here for my own practice of, hey, this is what I think is going on. You guys should be well informed enough to come to your own conclusions. And that's why I think these conversations are fun, is because there are different people that see different things. And over time, we are validated or invalidated over a long period of time. And so effectively, this is a good place to be partially risk averse, that we don't have any clear definitive idea yet that this is bullish. But again, this change of character that pushed us all the way to the top of the box and into the previous resistant points up here around $25,000. And it also happened on a reduced supply line as well. So here we have less supply coming into the market and an even greater price spread. So this was another really important part that I looked at yesterday. I pointed out in the private group. Here at the bottom, we see a resetting of the RSI, but more importantly, this declining supply line here, this amount of supply induced this spread. So just for fun, we'll measure that out so we can have a visual representation of what that is. So from here to here, that's around a 17.5% spread. And the supply line effectively drew straight through here like this. So now, if we look at this previous price spread to the upside, and we'll constitute a little bit of a closer look here, and we'll drag this up so we are getting the peaks and the peaks of this. Less supply, right, and more supply then created a pretty similar around, I'll keep this permanently drawn here, around 22%. So you had a bunch more supply come into the market to create a pretty equal price spread. This is a very bullish indicator. This says we are getting more price spread to the upside for less buying power. That usually indicates, and again, usually, not always, but that usually indicates that the market operator is in full control of the stock, and this price is going to go higher. And it's going to happen with little stops along the way, because they don't want a ton of people getting big positions in. In fact, that would kind of ruin their plan. So they've already built up a huge amount of stock. They're going to rise the price through a little bit of purchasing power. They're checking and testing that right now. And then finally, when retail is reinterested in Bitcoin at around $45,000, we'll see a return probably back to 20. So that's my long-term guess, because of the fact, again, right here, you're seeing increased price spread to the upside with reduced supply. You had a falling supply line throughout the accumulation range, and now this first bump upwards, here as well. So falling supply throughout the range, and then an increase for this new SOS. Now, for fun, I thought we would do is look at the 5-minute just for a minute, just for a little bit here. I don't suggest looking at these small time frames. It's usually pretty noisy, but this looks like an identical analog to what we just saw. Boom, boom, dip, and then a huge price spread upwards. So I suspect that this is actually a really small SOS, and that this is the backup phase right now. So what's fun about this idea of scale and variance is, say, let's look at what we just saw. Here's what we just saw. Again, so keep this picture in your mind. A little bit of primary support test here. A bump up. Looked very distributional. LPS check, and then bam. So again, this was a pretty clear distributional line, but we saw this in early 2020 and 2019 as well, that everything that was bearish was only bearish for like a half of a second. And that these are other clear indicators that we've had that change of character. We have a bearish with a up thrust, and then after distribution, we couldn't get back into the box, and still we break above. So these small pieces are important. So when we see this, and again, remember, this kind of primary support, overarching top, LPS check and up. Look what happens when we look at the 5-minute. You see something that looks almost identical. And this is one of the important parts to remember, is what we're doing is we're looking for the footprint and the fingerprint of the large market operators, and this is what it looks like. Here's the primary support. Ooh, drop down, dip, and then check up for an SOS. So I do suspect that what you're going to see is, and don't need to be too nice, but it'll be drawn like this, and then we'll be on our way to $28,000 within the next 48 hours. Now, after that, we'll probably come back down and test the ranges. We could come back down much lower after that, so we'll want to keep kind of stepping stone guidance. But if that's the case and we get to 28 grand fast, it's again another confirmation that we have had a big change in character to the bullishness of this asset class, and then likely the continuation. And we do see that in other areas in the market. Now, not everywhere. So Gallo was one I was really bullish on building a position in. We got in right around here, mostly around the 47 line. So we weren't too bad. Obviously it came down quite a bit after this previous top of 6.2 cents. But this again looks very similar to what we just saw with Bitcoin, where you had what appears to be a distributional trading range. And then instead of going distributional, it just hit a slight market below as a spring, a low volume spring, and then have continued upwards as well. So I suspect that you're going to see a bunch of these ideas move up. Just for one or two last references before we jump off for our next call, I wanted to take a look at Magic. Yeah, because Magic has just been fire lately. So Magic is one of the positions we took way back here in September, October, and November in the private group. We're big fans of the Web3 gaming sector. Hats off to Treasure Down, the Magic team. We've got them coming on for a podcast relatively soon. Spring looks like it was in the right place. And then more importantly here, check out this SOS, this backup phase, and then kaboom, straight out of the backside of the box. And look at how much movement there is still too. From the bottom at $1.49 just the other day, all the way to the top, 56% move in less than 6 days. That is huge. Hugely bullish, right? So when we're looking at Bitcoin, which is a much larger ecosystem, and we're seeing bullish breakouts outside of the trading range, again, it's just more confirmation that this trend has changed and we are in a bullish scenario probably for the coming months. Now, a good buddy of mine had shared a chart I wanted to try to take some sentiments towards. So let's see if I can get out here on the weekly for Bitcoin. That's not enough data. Let's see, do I have it open on, let's see if I have it open on the private group here. One sec, ladies and gentlemen, I'm trying to find something here. I thought that was quite nice. Yeah, okay. Okay, I should be able to, let's see. Sorry, everyone, I should have had this on the desktop already. Okay. So, kind of a messy chart, but the important thing I wanted to note here is this red line. And what it does is it measures from the top down through the halving, effectively. So every time this red line acts as basically supreme resistance to the bull market. But it also represents where we went to multiple times without breaking into a bull market. So if I zoom in here, we'll look at 2017. Okay, so it's again a little messy, hard to identify exactly what's going on here. But this red line, you can see we hit boom, 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 boom multiple times when we were at around 13,000. So I suspect, and this is what me and my buddy Jesse were talking about yesterday, is that what we end up doing is moving across, and we could be on our way up to around, what is that, $45,000 to check this red line up at the top and build accumulation at the back end of it. And that's what I expect is going to happen. We're going to run up to around $45,000. We're going to come back down and check 20,000 and maybe even try to get as low as 17 on some crazy fear spring in the future. And then we're off to a new bull market and much higher. But from now, where we are today here, I think we're headed around 45,000. So not the greatest image, but it is where I suspect we are headed. Yeah, something like this even. Pretty easily, we could say we're going around 40 grand. Boom. So that's what I suspect. This will check us all the way up to 40 grand, and then we'll do this. We may even check it back below it, and then get a spring down, and then move up much higher. Although this could have been the spring. Like, don't underestimate that this what we just witnessed was the spring, because you already saw boom, 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 and we talked about this before. That here's where you see the spring, and if you get a breakout above this descending line early already, Jesus, there'd be nothing stopping this thing. So ultimately, even though I think normally we would want to see more resets on a lot of the RSIs, it's just very bullish at pretty much every step of the way. And here, even on the 5, oh wait, hold on, did I? Okay, good, you can see the chart. I thought I would have left it closed. Yeah, here, again, on the 5 minute, don't normally watch here, but huge chunk of supply came in here to test the market, and it basically instantly got eaten up. I suspect that we're gonna, yeah, I think that's my guess. 28 grand by the within the next 48 hours, with basically no breather. It's gonna push into oversold territory multiple times. It's just basically gonna get oversold and stay oversold, and until we see more people FOMOing in, be like, oh, finally, I bought back into Bitcoin at 33,000. I bought back in at 36,000. I don't think that this bull trap is done yet. I think the fact that people are calling it a bull trap this early on is also kind of, oh, there was one last thing I thought was awesome too. We'll end with this because we got 5 minutes left. This is the Crypto Fear and Greed Index over time. And if you watched the last videos, you will remember one of the things I pointed out was on the right hand side of the screen, what appeared to be a reaccumulation throughout the bottom of greed. So right up into the bottom of greed, kind of hovering out of the areas of fear, we formed an accumulation channel, and we have broken above after this quick. So this looks like, I mean, you could probably chart the accumulation of fear and greed over time. I think we're going to break up to around 80 to 90 in the greed area, and that's the time to get out of the market. But for now, we just stepped our little tippy toe over into greed, and I think more people are going to be feeling it. And if you want to know, actually, this was kind of a fun one. There you go, FOMO. It should have. We definitely need someone to remix this so it says DYOR. Yes, sorry. I mean, we're going to move into the overbought area and stay overbought. Yes, that's correct. Thank you for fixing that. Yeah, I wouldn't be shorting the market here, not after these large changes of character. I mean, if you're in profit, it's a good position to potentially reduce risk, because we are at the top of the trend line right now, and there's nothing wrong with doing that. But my current estimate, based off all these other signals that we've identified, is that we move very quickly up to $28,000 and $30,000, and that all those shorts are left and screwed. We're moving up on limited supply right now, and quickly. So everything says bull. Awesome. Well, we'll leave it at that. We got 3 minutes left before our next call, so that should give us the time we need. Thank you all for joining us today. Give us a thumbs up. I'll be back more frequently. Once we hit 28 grand, I'll be watching very, very closely, because that will be the kind of deciding moment for us, I believe. And then from there, we'll talk about like 40 grand, I guess. So for now, 28 grand is the target. If we break, hold, and then recheck 20, we're going to like 45. It'll be crazy. It'll stress everybody out who's not already in the market. The audio seems rather low. Okay, well, I'll try to fix that next time for you guys. It's my bad. Still trying to get the streaming setup back to running smoothly. It's T with the Arcane Bear. We'll see you guys in the next episode. What do I click? Stop.